Imagine the excitement of building your wealth by investing in the dynamic world of stocks. Picture yourself making informed decisions and watching your money grow over time. In this video, we'll embark on a journey to demystify the stock market and empower beginners with the knowledge they need to start investing wisely. Join us as we explore the fundamental principles of stocks and shares, uncover the mechanics of the stock market, and introduce you to key concepts from The Intelligent Investor by Benjamin Graham. Why invest in stocks? Investing in stocks offers a unique opportunity for substantial long-term growth. Unlike traditional savings accounts, stocks have the potential to deliver higher returns over time. By harnessing the power of compounding, you can watch your investments multiply and build significant wealth for the future. As you invest, your money works for you, earning additional income through capital appreciation and dividends. Stock ownership also provides a chance to participate in a company's success and growth. As the company increases its profitability, you, as a shareholder, can benefit from rising stock prices and potential dividends. By investing in stocks, you become a partner in the company's journey, sharing in its achievements and future potential. What are stocks? At its core, a stock represents ownership in a company. When you buy shares, you become a partial owner and share in the company's successes and profits. This ownership comes with certain rights, including the right to vote on certain company decisions and the right to receive a portion of the company's earnings through dividends. Imagine you're part of a group of friends who decide to start a business together. Each person contributes some money to get the business off the ground. In return, you all receive shares that represent your ownership in the business. The more shares you own, the bigger your stake in the company and the greater your potential to benefit from its success. How the stock market works. Visualize the stock market as a bustling marketplace where investors come to buy and sell ownership in companies. Major stock exchanges like the New York Stock Exchange, NYSE, and NASDAQ serve as platforms for this exchange. These exchanges ensure that transactions are executed fairly and transparently, maintaining the integrity of the market. To navigate this marketplace, you'll need a brokerage account, which acts as your gateway to buying and selling stocks. Brokerage platforms provide access to a wide range of stocks, investment options, and valuable tools to help you make informed decisions. Think of your brokerage account as your personal window into the world of stock investing. Key stock metrics and terminology. Imagine you're exploring a new country, and you need a map and some local lingo to navigate effectively. Similarly, understanding key stock metrics and terminology is essential for successful investing. Let's dive into a few important terms. Market capitalization. This term refers to the total value of a company's outstanding shares. Think of it as the company's price tag. Earnings per share, EPS. Imagine the company's earnings as a cake, and EPS as the slices it's divided into. It tells you how much profit is allocated to each outstanding share. Price to earnings, P/E, ratio. This ratio reflects how much investors are willing to pay for each dollar of a company's earnings. A high P/E ratio might indicate high expectations for future growth. Dividend yield. Picture this as the interest rate your investment generates. It's the annual dividend income you receive as a percentage of the stock's price. Understanding these terms helps you assess a company's financial health and make informed investment decisions. Risks and rewards of investing in stocks. Investing in stocks offers exciting rewards, but it's important to recognize the risks involved. Stocks can be volatile, with prices fluctuating daily due to market dynamics, economic events, and company news. While these fluctuations can be nerve-wracking, they're also an opportunity for potential gains. Visualize the stock market as a roller coaster ride with exhilarating highs and nerve-wracking drops. However, if you stay on the roller coaster for the entire journey, the overall trend is upwards. This long-term upward trajectory reflects the historical growth of the stock market. How to start investing in stocks. Imagine you're embarking on a road trip. Before setting off, you need a map, a vehicle, and a plan. Similarly, when starting your stock investment journey, you need preparation and a clear strategy. Here's how to get started. Define your goals. Identify your investment goals, whether it's saving for retirement, buying a home, or funding education. Assess your risk tolerance. Imagine your risk tolerance as your comfort level on that road trip. Are you up for an adventurous route or a smoother journey? Open a brokerage account. Visualize a brokerage account as your vehicle for investing. It's your connection to the stock market. Research and select investments. Just as you choose destinations to visit, research different stocks and investment options. Diversify your portfolio. Diversification is like having multiple stops on your road trip. Spread your investments across different companies and industries. By following these steps, you can set out on your stock investment journey with confidence and purpose. Building a diversified stock portfolio. Imagine you're assembling a puzzle with pieces of different colors and shapes. Each piece is unique, but together, they create a beautiful picture. Similarly, Building a diversified stock portfolio involves selecting stocks from various sectors, industries, and geographic regions. Diversification helps manage risk. If one part of your portfolio faces challenges, other parts may thrive, balancing out potential losses. Imagine you're a gardener planting different types of flowers. If one flower doesn't bloom, the others still add color to your garden. By diversifying your portfolio, you're setting yourself up for a more resilient and balanced investment journey. Strategies for choosing stocks. Imagine you're selecting ingredients to create a delicious recipe. Just as you carefully choose ingredients for a meal, you should use a strategic approach when selecting stocks. Here are a couple of popular strategies. Fundamental analysis. This strategy involves evaluating a company's financial health, management team, and competitive advantages. Picture yourself as a detective investigating the company's story, financial statements, and growth potential. Value investing. Imagine you're at a clearance sale, and you spot a high-quality item at a deeply discounted price. Value investing is similar. It involves finding stocks that are trading below their intrinsic value. By using these strategies, you can make informed decisions and select stocks with the potential for long-term growth. Long-term investing mindset. Imagine you're planting a tree. You water it, nurture it, and watch it grow over time. Similarly, adopting a long-term investing mindset means being patient and allowing your investments to grow gradually. Visualize the stock market as a river with occasional rapids. While there may be short-term turbulence, the river continues to flow steadily over time. Similarly, the stock market can experience fluctuations, but history has shown that it tends to grow over the long term. By staying patient, avoiding impulsive decisions, and focusing on your long-term goals, you can harness the power of compounding and potentially see your investments flourish. Congratulations on taking your first steps into the exciting world of stock investing. From understanding the basics of stocks and shares to navigating the stock market and building a diversified portfolio, you've gained valuable insights. Remember, investing is a journey that requires continuous learning and adjustment. The Intelligent Investor, by Benjamin Graham, serves as an invaluable guide on this journey, offering timeless wisdom and practical advice. As you embark on your investment adventure, keep in mind that while we've covered the essentials, there's always more to explore. The information provided in this video is for educational purposes only and should not be considered financial advice. Always conduct thorough research or consult a financial advisor before making investment decisions. Your financial journey is unique, and the choices you make should align with your individual goals and circumstances.